Happy Monday, everybody. Guess what? Are you filing your taxes? Well, it could affect your mortgage. I know, breathing just affects your mortgage these days, right? But if you're going for the IRS tax returns, this is going to impact your mortgage. Why? Well, first and foremost, did you know that you can use your refund for your down payment? This is a true thing, right? So maybe you need a little bit of extra cash to make that number. Yes, you can use your refund as your down payment. However, we do then have to have a copy of your taxes in the file. There are reasons that we don't want your taxes in the file. Maybe you started a side hustle or you've got capital gains losses, right? But that's not impacting how your actual mortgage is to be paid. So we're only looking at the W-2. True story. So I was in operations, I was processing a loan, and this was about 15, 20 years ago. And we get a 4506T, which is something we should talk about. 4506T, that is for your transcripts of your taxes. And I get this 4506, and I call, I'm like, gosh, that's not the number that I have on my tax returns. And I see this refund from the IRS. This doesn't make sense because these tax returns say they owe money, right? So I call the woman and I say, hey, looks like there might be a discrepancy or an error because, you know, the IRS is perfect, right? No errors ever, right? And she's like, oh, no. The tax returns you have for underwriting my file are the income my loan officer said I needed to make. The tax returns I turned in were because I was short of my down payment. So I turned in different income. And I was like, well, here's how this works. This 4506T is to verify that the taxes your underwriting is using is the same as the IRS, that you're not making things up. Fun fact. So 4506T, if you're self-employed, we get these on you. We are seeing about your tax returns again for the same reason, making sure we've got the same data, and most likely you need that tax return transcript back. If you just filed, we can show evidence of filing. So evidence of filing plus any money that's paid is due, right? Anything that's due is paid, all that jazz. We could use that with your tax returns because maybe you need to use that most recent tax year. Maybe there was a better year in 2020, 25 versus 24 because maybe you took time off, right? This could be a thing. The other thing that's really important from taxes is if you have an IRS payment plan. If you have a payment plan, it's going to change your loan. You have to account this as debt that you have each month. If it is a new payment plan, you might not even qualify for a loan. You might have to show that you've got 3 months of payments made before we can do that. Why? Because the IRS, if you're buying or refinancing property, if you owe them money, that is debt you owe before the mortgage lender, and they could take your property if you default, right? Doesn't matter that you owe them $10,000 and you're borrowing $1 million from me. You default on them first. They had the debt on you first. They could take your property. So a lot of benefits to filing taxes, getting your refund, showing the amount that you're paid. There's a lot of hoops that jump through, but hear me. If you're changing numbers to qualify, it's really probably not a good thing to do. Let's talk about maybe alternatives for qualifications instead because we want everyone to be on the up and right. Do what you can, make a difference. It's Austin at Origin Point. Let's make it a fantastic week, y'all. Go team.